Very good evening to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, I welcome you all in today's 126 CP program organized by AASP of ICI. As we all are aware that today's topic is very important, that is the key considerations in the audit of education sector. And in order to tackle this very important sector, we are having with us CA Kumar Rai Singhani ji and Madam Asta ji will join later. So Honorable Chairman Sir and Honorable Vice Chairman Sir both are stuck up in the meeting. They will join in the couple of minutes. So without wasting much more time, I request both the moderators to please start the proceedings of today's seminar. Over to you, Sudeep ji, please.
Thank you, Anil sir. So, good evening, all of you. We welcome you all to this informative webinar being organized by AASB of ICI on the topic key considerations in audit of education sector. I extend my heartiest thanks to Sanjeev Singhal sir, Chairman AASB of ICI, and Vishal Doshi sir, Vice Chairman of AASB of ICI, for giving me an opportunity to be part of the webinar as a moderator, and also to Anil sir for executing the webinar very precisely and accurately. So today we have two of the eminent speakers with us, CA Astha Gupta and CA Kumar B. Rai Singhani. So let me introduce CA Astha Gupta to the group. She is a partner at SK Gulati and Associates, a renowned CA firm since last 4 years, and handling assignments varying from statutory audit, personal and corporate taxation, income tax assessments, GST compliances, assessments, and advisory. She has also worked as a senior consultant at EY India in risk advisory team, conducting internal audits and risk assessments projects catering to telecom sector. She was also deputed in Philippines for an engagement work. Apart from her professional career, she is also active in various ICI programs participations. She is invited as guest speaker at various sessions organized by AASB and also convened technical sessions organized by Accounting Standards Board. She is also recently appointed as member of Financial Reporting Review Board of ICI. She was also invited as guest speaker by Delhi Board of School Education for Career Counseling and has also joined as treasurer of Laghu Udyog Bharati, which is an all India organization working for benefit of micro and small enterprises. So this was a small introduction of Astha ma'am. Now I would request my co-moderator CA Atul Khurana to kindly introduce our another eminent speaker CA Kumar B. Raisinghani sir. Over to you, Atul.
Thank you, Sudeep. Very warm welcome to all of you in this webinar organized by AASP of ICAI. On the onset, I would like to thank C.S. Sanjeev Singhal sir, Chairman AASP of ICAI, C.A. Vishal Doshi sir, Vice Chairman AASP of ICAI, for bringing forward this platform where professionals come together and share their knowledge and experiences with other professionals so as to ensure we all can deliver high quality audits in the industry. Also, I would like to thank Anil sir, a man who is working tirelessly behind the scenes and ensuring successful organization of these webinars. So today we have two eminent speakers who will be sharing their insights on key considerations in audit of education sector. And as we all are aware, that education sector plays a pivotal role in shaping the future of our society, and hence ensuring its integrity, efficiency, and transparency is paramount. So today our eminent speakers will be sharing their inputs on critical aspects of auditing within this sector, exploring the unique challenges and opportunities it presents. With this, I would like to welcome our another speaker of the day, CA Kumar B. Rai Singhani sir. Mr. Kumar carries over 13 years of experience in auditing, trainings, and financial reporting. On corporate trainings front, Mr. Kumar has provided more than 550 hours of training on standards of auditing and financial reporting aspects to various CA firms. His financial reporting experience includes India's implementation and IFRS conversion of wide variety of businesses, including law firms, financial services, BPOs, oil explorations, and detailing sector. His experience also includes 3,000 hours of teaching standards on auditing and Indian accounting standards to CA students. Also, Mr. Kumar conducts trainings for various professional bodies. With this, I would like to hand over this session to Mr. Kumar for sharing his insights on the topic. Over to you, sir.
Thank you for that kind words and thank you for the warm welcome. At the outset, I would obviously like to thank the Institute for providing us a chance and a platform to, come share our views, with the fellow members. So it's a great opportunity, and every time I get a call for the seminar, my level of excitement is very same. And as you said, a big thanks to the chairman as well as the vice chairman, and also the also Mr. Anil sir. So he has been working tirelessly for arranging, organizing these seminar. So today's topic, when I heard about today's topic, I said yes, this is a very interesting topic. So it actually combines two aspects of what I have been doing. I'll just share my screen also as well at this time. So yeah, what it does is it combines two aspects of my career, as I can say. So I did my articleship in audit. I was part of audit firm or audit team. So I got hands-on experience with audit, and post qualification also I did audit. And now I'm into education sector per se, wherein I teach CA students, and so it's a combination of both the things. So today's topic, and as Sudeep sir also said, that education sectors plays a very plays a pivotal role in the economy. And if an economy has to be moved forward, then education sector is one of the strongest pillar that needs to hold good. So as an auditor, obviously we have been given a huge responsibility when it comes to providing an opinion on the financial statement. So as standards on auditing layout, that this is our main or fundamental or main overall responsibility, if I can say, is expressing an opinion on the financial statements. Now, when we as an auditor are providing an opinion on the financial statements, it obviously enhances the amount or the degree of the confidence that user will have in those financial statements, because users of the financial statements, be it shareholders, government, tax authorities, or employees, suppliers, or various other stakeholders, uh, refer to financial statements for lot much information. Now, their concern is that yes, this information should be reliable because they are using it for their decision making. So a third party opinion in terms of the opinion of an independent auditor. So society has, uh, you know, bestowed upon us this responsibility to, whereby our opinion carries so much importance that all the stakeholders rely on that. So, so in that context, we play a very important role as a chartered accountant and as a member of ICI. We should all, sincerely strive each day to maintain this reputation that we carry, and also to take it to another level, so wherein our ethics, our culture also play a very important role. Now, speaking of educational sector or education sector or educational institution, now many a times these are not for profit entities, because generally the purpose is to provide education. So their goals or their audit would be very different from a for profit entity. So generally we'll go by fund accounting and all those aspects. So we'll come to those critical aspects, but we say that audit of such entities becomes all the more important, all the more prominent, because then there is lot much at stake. So today's session we'll try to touch upon the audit of education sector. We'll, in the context of education sector, what are the various standards on auditing and how do they apply? So we have divided broadly the session in terms of first understanding the sector, then going into the planning phase, and then execution phase and the conclusion phase. So I'll be taking up the planning phase as well as the financial statement part as far as the balance sheet is concerned. And Asta ma'am would later on join and conduct the part that relates to P&L and reporting and all those aspects. So this is just a broad agenda or work allocation sort of thing that we have done, right? So let's get started for that. But before I thought that before we dive deep into audit of education sector, it is it's really very important that we understand first that how does a normal audit functions, or these days what we call it as a risk-based audit. So any audit, be it education sector or any other sector or any case wherein we are required to express an opinion on the financial statements, the audit, generally the audit workflow gets divided into three phases. That is a risk assessment, the risk response, and the risk reporting. So we call it as a risk-based audit. See, as an auditor, we are required to express an opinion on the financial statements, that is whether they give a true and fair view. Now, whether they give a true and fair view, we have to examine. So what we do is we do a thorough study of the financial statements. We assess them, okay, if there are any misstatements in those financial statements, if there are misstatements, whether they are material or not. So all these aspects are something that we study while before we give our opinion. So rather than spending, so risk-based audit basically suggests that rather than spending equal amount of attention to each balance sheet and P&L item, we try and assess, first identify and then quantify and assess the level of or the probabilities of misstatement that are possible in a given set of financial statements. So say for example, whenever we are doing an audit of an educational institution, in the P&L item, the biggest line item would be the tuition fees or the revenue from tuition fees. Now, tuition fees in an educational institution might be subject to a lot many complications. So in terms of how the revenue is recognized using proportionate completion method. So okay, I might have collected the revenue, but have I delivered those many number of lectures to be eligible for revenue recognition as per AS9? This could be one of the key challenge. Another key challenge could be what are the internal controls surrounding the revenue or the tuition fees? Because as an educational institution, I might have various free ships or scholarships. So free ships could be based on, say for example, an economically backward class getting a exemption in terms of or concession in fees. So how does the institution maintains those records, tracks those records that only genuine people who are actually eligible for those free ships and scholarship gets those free ships and scholarship? Because tomorrow, if there is any problem into that process, it brings into question the going concern status of the educational institution, because you are subject to a lot of regulatory processes and supervision that whenever there's this little problem, the organizational status, be it as a charitable organization or private aided fund, aided institution, it might go away. So as an auditor, we need to understand that what are the areas of financial statements that are prone to misstatement, wherein, okay, I need to do a thorough controls testing because I need to express an opinion. I need to tell my stakeholders that this is what it is. So a risk-based audit generally start with a risk assessment, wherein we identify, okay, what are the events that would cause a material misstatement. So it could be like not being able to account for free ships on a proper basis, or not being able to identify the genuine cases of free ships, or it might be, say for example, not being able to account for assets on a proper basis, like there is a problem with some depreciation methodology, or misapplication of designated funds, so a building fund getting applied somewhere else. So these are the issues that we as an auditor should identify and assess right at the planning stage. And if we feel that, okay, this is a high risk area, we should devote more resources, more time, more manpower to the audit of those areas. So that is often called as a risk response phase. So risk response phase is basically where you try to figure out, okay, do I need to do controls testing, or do I need to follow a substantive approach? So those aspects apply equally to the educational sector as well. The third aspect is the reporting, right? When we talk about reporting, is so you identified the risk, you collected, you performed your audit procedures, you gathered audit evidence. Now, what is your opinion? Are these financial statements after your thorough audit, are they free from material misstatement? Or you feel that no, okay, there is still some problem on which, because of which I need to qualify, or I need to, or worst, I need to give an adverse opinion? Or is just that, okay, things are fine, but there is some emphasis on matter paragraph that I need to highlight? So like any audit of educational institution will also proceed on the same lines. That is, you will do a risk identification and assessment, try to respond to those risks by performing your audit procedures, gather evidence, and at the end you conclude, okay, what report might be appropriate. So this is how the risk-based audit would generally flow. Now, before we dive deep into the audit of these educational institutions, it is very important to understand the regulatory framework. Now, educational institution or educational sector is, I can say, one of the highly regulated sector, because of the impact, as we say, that it has on the economy. So I could not stop myself from putting this Sanskrit adage or quote. I took it from so our institute has a technical guide on internal audit of educational institutions. So it has this saying which I say that we should discuss right at the beginning, so as to lay the foundation as to why this session is really very important. So that Sanskrit saying goes like this: it is education which leads to liberation, and liberation from three things: liberation from ignorance, liberation from superstition, liberation from prejudices. So being an educated person means you are liberated, and only education can bring you this level of liberation. Why liberation from ignorance? Because it shrouds the mind. Why liberation from superstition? Like the ignorance which shrouds the mind, and superstition which paralyzes your efforts, and prejudices which gives you a blind vision of the truth. So only if you are educated will you be actually be liberated in the true sense of the word, and on these three parameters. So having said that, education definitely plays a very important role, and the government actually really very well understand this. That is why when we read our constitution, that's the Constitution of India, the citizens of India have been given a fundamental right to education. So that is why you would be aware that up to 14 years of age, people have right to free education. So that is where a lot of state governments also work on that goal, whereby, uh, education is provided at a free rate or a concessional rate in government schools. So this single, part of the constitution highlights the importance the education has in any country, and it reinforces that our government is committed to the development, maintenance, everything of this educational sector, right? So at a government level, well, like before we dive deep into who are the educational institutions and what do they do, stuff like that, when it comes to the regulatory framework, so we had educational board, which existed even before we got independence. Uh, at present, the education activities are looked after by Ministry of Human Resources and Development, which takes care of these activities by two parts. So Ministry of HRD, in fact, was added on later on. So first, before independence, we had this educational board, and then right after independence on 29th August 1947, a Ministry of Education was formed, which was then replaced by the like at present, if I say, the education affairs are looked over by Ministry of Human Resources and Development. Now, Ministry of HRD itself is divided into two departments. Like you have Ministry of Finance, which has further CBDT, and one for the indirect taxes. So that way, Ministry of Human Resources and Development is further divided into two departments. That is Department of School Education and Literacy, that basically looks after the primary education up to 12th grade and all those things. And then there is Department of Higher Education that looks into the higher education. So University Grants Commission, deemed to be university, all those, are under the purview of Department of Higher Education. So at a government level, this is how our structure looks like. So you have Ministry of HRD, and it has two departments: the Department of School Education and University, and the Literacy, and the Department of Higher Education. Not only central government, various state governments are also actively, have a lot of provisions when it comes to their respective state acts, because they are responsible for establishment of state universities. So like Mumbai University, Delhi University, these are all classic examples of universities that uh, command a huge respect, right? So state governments also have a role. Apart from that, there are a lot of advisory bodies. So like recently you would have heard about National Education Policy. So government, at a government level, you have a lot of structure as far as education is concerned. So that highlights the importance that education plays in the economy, because government has devoted so many efforts. Apart from this, in our country, one other important feature is these private educational institutions. So you might take private medical colleges, for example. Now, when we do audit, we might be asked to audit a private educational institution. So, talking about private educational institution, two landmark judgments of the Supreme Court, the Honorable Supreme Court, that are very, very relevant here is the first one was in the case of Unni Krishnan JP. So there, the Honorable Supreme Court came forward and said that, okay, although you are a private educational institution, but the government, that is the state, has the power to tell you that, okay, boss, you cannot exceed these much amount of fees. So this is in the context of education being a right and the importance of the education. So this judgment was a landmark judgment which says that if you as a private, unaided or recognized or affiliated institution, you cannot charge a fee exceeding the maximum limit fixed by the state, right? So because there were some institutions that were charging a lot of fees, and the question of education being affordability being comes into picture, it went one step ahead. So if you're not if you're unaided, that's fine, but if you're aided institution, then the government has a role in your policy decision making as far as recruitment of teachers, conditions of services of teachers and other staff are concerned. So although you are a private educational institution, government has a role to play. However, later on, another judgment by Honorable Supreme Court partially reversed this thing, wherein it says that, okay, uh, you are a private organization, so we understand that role of government or the state has to be to a particular or a limited extent, but the objective is, so we are partially reversing the previous judgment, but the objective still remains that you should be running this institution not with the motive to earn profit, but to provide education. So whenever there is an educational institution, the charitable nature assumes a great importance, and that was held up by the second judgment, right? So this judgment also say that, okay, charitable nature is important, but it to an extent diluted the government interference in the functioning of educational institution. Now, to an extent, you can argue that, okay, if there are lesser amount of government intervention, then probably the private institution might be more fierce or competitive. So it would ultimately result in the betterment of the sector of the sector. But whenever we are talking about educational institution, I feel that these two are the landmark judgments that we should be referring to. So we understood, okay, what are educational institution. We also understood the regulatory framework at the constitution level and at the state level. And then we understood that, okay, if you're a private institution, you need to be aligned with those judgment that, okay, your main main motive is not profit making, but it is to, there's some element of charitable institution. Now, as an auditor, like the first step that I would do, obviously, after, so here I'm assuming that all the pre-acceptance and the engagement formalities have already been completed. So the client has agreed to the terms of engagement and you have been validly appointed as the auditor of the educational institution. We have obtained the NOC of the previous auditor also as required by our ethical principles. So once that all is done, we need to plan the audit. And for planning the audit, knowledge of the client's business, the laws that are applicable, the environment in which it operates is really very important. So in that context, at the outset, it is very, very important to, understand that what are the different laws or regulations that might be applicable to the educational institution. So we can divide them into three main categories. One is the statutes governing their creation. So generally, an educational institution might be incorporated as a society, in which case Societies Registration Act of 1860 as well as the respective state act would apply. Or it might be, incorporated as established as a trust or a public charitable trust. So in that case, Public Trust Act would apply. Or it might be incorporated as a Section 8 company, in which case the provisions of Companies Act 2013 will apply. But at the outset, it is very important to understand the form of constitution of the educational institution and accordingly, decide the statute that governs that creation. Because see, for example, if it's a Section 8 company, then the appointment of auditors and the manner of appointment will be governed by Companies Act, right? So you'll have to intimate to the ROC and everything like various other things will apply as per that law. So this is very important to understand right at the outset. Now, if you are an educational institution, if you have incorporated Section 8 company, the government might dispense with, with you using the terms limited, right? So you can have the word education or any other similar term in your name. So this is also one thing that is relevant and important to understand. So first we should try and gather knowledge about, okay, what is the form of the organization and accordingly, what is the statute that governs the creation, because this is the main law. Then there are plethora of acts that are generally applicable to education in India. I've listed down 5 of them. So one is the Indira Gandhi National Open University Act, the IGNOU Act as it is commonly known. It could be Universities Grants Commission Act, Copyright Act, because as an educational institution, you might be publishing a lot of books, magazines. So Copyright Act becomes really very important. And specifically when you have an intangible asset sitting in your balance sheet for, pertaining to the research work or any publications that you have done. And English and Foreign Languages University Act is also something that might apply. So that was the second category of law. So at this stage, what we should do as an auditor is we should ask the management, okay, what are the different laws that are applicable to you and how do you monitor compliance with them, right? So for these 2 categories. Again, the third category is the laws governing tax exemptions. So it could be, Income Tax Act or the act related to GST. This will also be very crucial and will be found in almost every educational institution. The third category was this. And then very important to understand that although these are charitable institutions, they are still required to follow the accounting standards issued by ICI, right? So when we talk about a Section 8 company, then it will have to follow the accounting standards that are prescribed under the Companies Act, which are very similar to the ones that are issued by the ICI. But if it's a public trust or a society, then it will have to apply the accounting standards issued by ICI. This is really very important to understand because in our opinion paragraph, we need to make a mention of the financial reporting framework, right? In the accounting policies, that is basis for accounting, the educational institution needs to make a reference to how they have prepared the financial statement. So understanding that accounting standards are applicable becomes really very important. So specifically AS9, which talks about revenue recognition from services to be made on a proportionate completion method, or if you're a Section 8 company with a very high net worth and, Ind AS becomes applicable, then Ind AS 115, which talks about, per revenue recognition with reference to the performance obligation. So at the outset, the knowledge of these statutes or acts is very important. As an auditor, I should have this knowledge. I would now try to link it with a particular standard, which is SA 250, that is consideration of law and regulation in an audit of financial statement. So when we do audit, what is our duty as far as compliance with law is concerned? So SA 250 clearly spells out our responsibility. It says that obviously compliance with law is primary responsibility of the management. So it is they who have to determine what law is applicable, what compliance is required, and what is our status. As an auditor, we need to understand or divide the law into 2 categories. The first category is those laws that are having direct effect on financial statements. So this could be like Income Tax Act, because it will have a direct impact on the calculation of provision for tax. Or it could be Companies Act for a Section 8 company. So these are the laws having direct effect on company's financial statement. So we'll have to evaluate whether there is a resulting material misstatement arising due to this. Whereas other law, right, are those like, say for example, which will not have a direct effect on your financial statement. But this is the compliance with these type of law is fundamental to the operating aspect. Okay. So as an auditor, my responsibilities are restricted when it comes to other law, because I'll be making an inquiry, understanding the compliance, how do the management, tries to fulfill their responsibility under these law. So having obtained a list of regulation, we should be also dividing them into these 2 categories. Now, we having understood the legal background of educational institution, we get started with the actual audit. Now, when you start the audit, like workflow, we said, I have now added one more step to it. So there is obviously a risk assessment, there is a risk response, but as a part of risk response, now I've included review of work also as one integral component, because SQC1 as well as SC220 includes an element relating to the engagement performance, which emphasizes the need for the work being reviewed by an appropriate senior level. So this is again an important aspect, because then reaffirmation comes when the work gets reviewed. Let us try to understand these four aspects in the context of audit of educational institution. So risk assessment stage, before you start the risk assessment stage, first understand whether engagement has been accepted properly, right? You have filled the acceptance continuance checklist, right? Because SQC1 requires that there has to be some preconditions before you accept a client. So it requires that you evaluate the integrity of the client, you evaluate your own competencies, and you evaluate the ethical requirements. So while you are doing the planning of the audit, it is better that you first revisit your pre-engagement formalities, that whether did you evaluate the integrity of the client. So it would mean the educational institution, its its trustees or promoters for that matter. This is again very important, because you don't want to be dealing with persons who are having a little tainted background. So obviously the call to accept, not accept, has to be made on various basis. But again, here what will be important is how do you also document it in the context of acceptance or rejection. See that there is a audit engagement letter. So a standard format of audit engagement letter is available as a part of SA 210, which is for statutory audit under Companies Act, but you can modify according to the law that is applicable to the company, to the educational institution. If it's a tax audit, then we need to have a different sort of engagement letter. Once that is done, we should go on to prepare an overall audit strategy that takes care of the materiality. Now, again, here materiality is an important number. So we might have to use a benchmark. So generally for profit-making entities, we use a benchmark that is net profit. But for educational institution, an asset might be an appropriate benchmark, or revenue or tuition fees might be an appropriate benchmark, because generally profit number might not be that much more indicative because of scholarships, free ships, etc. There should be audit team discussions. So the engagement partner should ensure that the team has been thoroughly briefed about, they have knowledge about this sector, they have knowledge about what are the special or critical aspects of accounting when it comes to accounting for this sector. The team should then go on to do a risk identification and assessment. So they should study a balance sheet, perform a preliminary analytical review. You compare the last year financial statements with the current year, see what has changed at a preliminary level, do a trend analysis of last 5 years, see where the trend line is going. And on that basis, make inquiries of the management, identify if there are any areas that you feel might have a misstatement, right? So you might make a preliminary inquiry as to internal control, and you might observe that internal controls related to tuition fees are a little weak. So then at that time you need to say that, okay, while I'm developing the overall audit plan, I will have to rely on the substantive procedures, because controls are not working properly. So understand the internal controls, evaluate them, and accordingly form a judgment about what are the nature, timing, and extent of audit procedures that you need to perform. While we are doing risk assessment, you might come across certain deficiencies in internal control. Now, this you might want to communicate as a part of management letter or letter of weakness, along with the suggestions to the management as well as those charged with governance, provided it is significant. It is a significant deficiency. Then comes the response phase. So once you have identified and assessed the risk, our duty as an auditor is to draw up a responsive audit plan that determines the nature, timing, and extent of the audit procedure. Once you have, so there should be a clear link as to what was the risk you identified, right? So the risk, say for example, you identified the weak internal controls in relation to tuition fees. So you decided that I'll rely more on substantive. So you say, okay, this was the substantive testing that was required. This is what I have performed, and this is what I have documented, and I've obtained the written representation also. So a file, audit file needs to be, linked from start to end. We build the audit file from the bottom. So we keep engagement letter right at the bottom of the file, and then add the planning documents, execution documents, and then at the top comes the audit report. So documentation is very critical. It's one of the important aspect, and considering the regulatory follow-ups that auditors are receiving these days, documentation is the only good friend that we have. Because if you have performed the work, if you have properly planned the audit, and you have done the documentation also, it will become very easy to demonstrate that, okay, whatever you did, you completed the audit in compliance with the standards on auditing. Right. So this is very important. Return representation again is one of the aspects that people generally miss out, but it is one of the audit evidence. Yes, obviously it is not a primary audit evidence. You need to perform audit procedures also, but return representation is one of the important audit evidence that should be there on the file. Review of work performed would involve constant first direction and supervision of the work of the juniors. Whatever issue you have, make sure that the junior notes it down in the form of review points, and then gets an answer against your review points. You, as a reviewer, have a responsibility to ensure that all the relevant essay requirements have been addressed. All the reportable items have been reviewed by you. What was the risk assessment? How was it identified? What procedures you had planned? Whether it has been, done, completed in that particular manner or not. Once you are through with the review, then we come to the conclusion stage. Okay, now you have, audit evidence. What do you feel? Do the financial statements give a true and fair view? You have to communicate with the help of the auditor's report on the basis of audit evidence. Is there any modification required? Or do you need to just, although you're not modifying the opinion, but you need to add an emphasis on matter paragraph or an other matter paragraph. So all these aspects will become very critical. And any non-standard report, if you are issuing, then it is a good practice, as well as also mandated by essays, that you communicate with those charged with governance. Say, for example, if you are planning to include an emphasis on matter paragraph, then would be a good idea to you know get into uh, a meeting or a call with audit committee or those charged with governance, whereby you emphasize that, okay, this is the issue that we had faced, and this is how we are planning to address it through a emphasis of matter paragraph. So this broadly summarized the three phases with which we started. So this was in general about the audit approach or how it will flow. So planning, I'll re-emphasize, is very, very critical, because an audit which is not well planned, like as the saying goes, failing to plan is planning to fail. So if we are still stuck, if somebody is still stuck on the traditional audit, whereby you just see the elements of financial statements, you look at the P&L item, you look at the balance sheet items, and you get it done with it or close with it, that might not really work. What is required or what is the need of the day is, we need a risk-based audit approach, which has been mandated by essays when they came as an amendment, or they were introduced in the year 2010. Our standards on auditing are in line with the global best practices, which is international standards on auditing. And recently, our code of ethics was also made to be in line with the ISBA code of ethics. So ours accountancy is the only profession that has an ethical body sitting at a global level, and our ethical standards being compliant with the global best standards. So it's a lot of responsibility that we are carrying. Our opinion is being relied upon by so many people. So it is really very important that we understand the context, and we do a thorough and a diligent audit with all the phases or all the bases covered. Now, this was about the planning. Now we go very specifically to the educational sector. Now, any audit would require a process understanding right at the inception. Right? Once you're developing an audit plan, it is important to understand the client's process. Knowledge of these processes can be documented in the form of a walkthrough, right? A walkthrough is whereby you take a single transaction and understand the process from start to end. A walkthrough is different from an SOP. SOP is a document that the entity would have in terms of the standard operating procedure that they follow. But walkthrough is a part of the file of the auditor's documentation. I would suggest that we have this practice of having a walkthrough for all the important process. So, like one process in our case could be the student admission. So we sit with the client, we sit with the relevant person, understand what is the cycle of the admission process, right from inquiry to passing out. So, okay, there is an inquiry, there is a issue of prospectus, then the form is submitted, then the merit list gets generated, then people get selected, they accept, the admission, fees are paid, they are enrolled, they are allotted a roll number, they sit for the class, they study for the full year, appear for the exams, pay examination fees, get a certificate at the year end. How does this entire process flow? In a documented form, when we write out for one particular transaction, that is called as a walkthrough. Now, walkthrough is really important because it will tell you if if the process has any flaws or any loopholes or any gaps, which is important from auditing perspective. Uh, why it is really very important? Because see, for example, if there are any process flaws at the time of student admission, it might result in incorrect or inappropriate or missing revenue, right? So some of the students' data might not get captured, or we might not have sufficient information, or any other mishap can happen, which could result in a misstatement, or a worst case could result in penalties for the organization. So the entire student admission process, there should be a walkthrough, right? From the admission to upgradation, suspension, and alumni records. Like how does now it, the journey of the student. Okay. So generally, every educational institution will have a unique student reference number, right? So your walkthrough should try to capture all these details along with the bulleted points that we have on the screen, that, okay, what are the types of fees that you levy? What is a fee chart? Who approves a fee chart? If there are any concession, what is the process that is to be followed? Because these, once you know the process, then accounting and auditing becomes really very easy. So I would say that spend a lot of time on walkthroughs. Okay. Now, while we are talking about walkthroughs, and another important aspect would be the RCMs, as the risk control metrics that the organization might have in place already. So what are the risks that the management have organized, and what are the controls that they have designed, implemented, and maintained for those particular risks? Okay. So thorough understanding of their SOPs, preparing a walkthrough, getting their RCMs, looking at them and identifying, okay, whether they have identified all the risk, or if there is some risk that has been missed out by them to be identified, then you say that, okay, this is the risk that has been missed out. So the control is missing, right? So I need to do a lot of substantive work on this particular thing and so on. So all these things needs to be very well or very clearly documented in the form of walkthrough. Another important process for which a walkthrough might be required is employees. So educational institution, obviously students are really very important. Another important, because being a service organization, another important aspect is the employees, that is the teachers that work with you. So what is the process of hiring? So say for example, there is a college that is affiliated to a university and is subject to grants. Now, university would have laid down that, okay, for you to be eligible to teach accounts to these particular college students, you should have a net set exam clear, or you should have some particular exam or a qualification, right? You should definitely be a CA. So whether these are adhered, is there a job description for each profile? How are the payments made, monthly basis? Is it based on the number of hours of lectures delivered, or is it based on the amount of time that the professor has spent, or just on the basis of a monthly fixed fee? Are all the statutory deductions being taken care of, be it Provident Fund, ESIC, etc.? So all this is really very important. Having these documented processes will give you an idea of where is the missing link in terms of processes, etc. Inventory management could be another important process because a lot of inventory in terms of stationery would be there. So what is the budgeting process? Is there a budgeting process in place? Is there a budget committee? Do you obtain, how do you obtain quotations? Is there a pre-approved vendor master, pre-approved vendor list from which you can only order? Because if there is not a, so say for example, as an organization, you don't have a vendor master or a vendor list for acquiring stationery, then the staff might acquire stationery from their relatives or known persons, resulting in kickbacks. So this could lead a loss to the educational organization. And physical verification is also very important as far as inventory is concerned. PP, a single most important asset would be the school building. A lot of organization would have a part of it as a school playground, I'll not say a community hall, or a hall whereby they conduct their annual functions and all those things. So there should be a PPE register in place. There should be proper tagging of the asset. There should be someone who is doing a physical verification of asset at regular intervals, which we generally consider as once in every 3 years. So all those aspects together are really very important for to be documented as a part of PPE walkthrough. So it should be there. So these three processes, if there is a walkthrough, mainly for students, which is on the revenue side, for employees, which is on the expense side, and the another will be the PPE, which is on the asset side. So at least bare minimum, these three walkthroughs should be there. Another walkthrough which you might incorporate by yourself is the walkthrough of the treasury functions. So who looks into the treasury? How do you, manage cash? How do you, do a follow-up for overdue fees and all those things? So treasury could be again one of the important thing. So we have understood the audit workflow. We have understood the process, that will be adhered to by the educational organization. Now, another aspect of accounting that we go next is the concept of fund-based accounting. Okay. So you will prepare a balance sheet. Instead of P&L, you will prepare income and expenditure. You will prepare a receipt and payment, which will be like a summary of your cash account, or you can give a cash flow statement, and then you'll have a significant account. So another aspect which we mention is the concept of fund-based account. Now this is unique to the educational institution. Okay, so an educational institution would not have like a share capital or something. It would have money collected through donations, grants, etc. So this is where fund-based accounting, comes into picture, whereby the money that you collect are credited to a fund which are shown as a part of on the liability side of the balance sheet. So this is like your own funds, very similar to the share capital. So a fund could be a specific fund, like for a designated purpose, or it could be a general fund. Now, it is very important that these are utilized only for the given purpose. So if there is a school building fund, you need to ensure that, okay, opening school building fund was this much. During the year, I've received so much amount of grants, donations, etc. And I've spent this much on the construction of the school building. So this is my, closing picture. So we need to be very careful whether it is an unrestricted fund or a restricted fund. Because if it's a restricted fund, then it has to be used for only that particular purpose and not for other purpose. Where unrestricted purpose, unrestricted funds, you have no specific registration restrictions for that. Okay, so this could be when it unrestricted, it could be a designated, like for specifically legally binding purpose, or it could be a general fund also. So this is how your structure would look like. To just have a look at a balance sheet items before Astha ma'am takes up and gives us an idea of how the audit of P&L would look like, and the other aspects of the reporting, etc. What we say is, when you look at the balance sheet on the liability side, the first thing that you would come across is the funds, right? So there would always be a general fund, which is not for any specific purpose. This would generally include your the amount of money with which this organization was formed. It would have come from promoters, right? Another one could be your like we have in company final accounts, we have in company financial statements, we have surplus in P&L. So your income balance from income and expenditure account could be disclosed as a separate fund, or it could be added to the general fund, like how we do for company financial statements. We have opening surplus in P&L, add current year profit after tax, you do the appropriations, and then you have the closing balance, right? So obviously, if the income is more, then the fund increases. And if the expenses are more than income, then the fund decreases, right? And then there could be other various types of funds. It could be an endowment funds or a specific grant or revenue expenditure that is yet to be incurred. So say, for example, price distribution fund. We need to make sure that for each fund, we give the movement as to what was the opening balance, what are the additions during the year, and what are the, utilizations, if any, and corresponding what is the closing balance. So this is a general kind of disclosures that we need to give about the opening balance, the additions, the utilizations, and the closing balance. Apart from funds, then you will have liabilities. Liabilities could be a major outside liability, could be loans or borrowings. So we go by the similar classification as to whether it is secured, unsecured, what is the nature, purpose, whether it is interest bearing loan or an interest-free loan. So sometimes you might have received an interest-free loan from a government. Now, if that educational sector is subject to Ind AS, being a Section 8 company, now those interest-free government loans will have to be, recognized at fair value, resulting in a component of government grant. So say, for example, I have received a 10 lakh loan from the government of India, which is interest-free, and the market rate of interest would have been 8%. I need to do a fair valuation as to what is the notional interest that I'm saving in present value terms. And then, so say, for example, the present value of that loan is 8 lakhs. So I need to recognize 2 lakhs in my income statement over the tenure of the loan with a corresponding interest expense. So if you're doing Ind AS educational institution and there is a interest-free government loan, not a grant, but a loan, which needs to be repaid after a time, then you need to be very careful. For interest-free loans under AS, there is no specific requirement. They get accounted at the face value itself. Caution money could be one important liability, and it could be a very long-term liability because a student might enroll now, and if you're a school, he might pass out after 10, 12 years. So that could be a huge gap for which you will have to retain that caution money. On the asset side, a major asset, like we start with the non-current assets per se, is a PPE. So here again, I'll have to re-emphasize that, if it's a Section 8 company, then we need to adhere to the Schedule 3, whether it's Division 1 or Division 2, depending upon whether you're following AS or Ind AS. In recent times, Schedule 3 P&L format was amended, whereby revenue from operations, which earlier included only sale of goods and sale of services, was amended to also include the grants, donations, or subscriptions, etc., that a Section 8 company receives. So just thought that I'll bring it to the context. But if it's a company form of organization, then Schedule 3 format is something that will prevail. Your PPE schedule will have a similar reconciliation like gross block opening, additions, deletions, and the closing, and accumulated depreciation, impairment testing if it gets triggered by AS 28. So here again, I'll re-emphasize what I stated at the beginning, that even if you're an educational institution and your objective is charitable purpose, the accounting standard will still apply. Okay. So these are a lot of, PPE items that will be there. We need to be careful that capital advances, that is advances for purchase of fixed assets, are to be grouped separately. CWIP will be grouped separately. And if there is a lien mark on any particular asset, then that as well needs to be, presented separately. Capital work in progress would include your, let's say your school building construction is under progress. So here also you need to first see whether, okay, all the relevant approvals have been obtained as in terms of, the building, local municipality, as well as the, educational authorities that are supposed to give the approvals. Investments could be out of the caution money that you have collected or other surplus that you have generated from operations. We need to bifurcate into long-term and short-term and account for them as per AS 13. So if it's a short-term investment or a current investment, as per AS 13, it will be valued at cost or market value, whichever is lower. But if it's a non-current investment, that is a long-term investment, it would be generally valued at cost. However, if there is any other than temporary decline in the fall of value of investment, then that should be provided. Now, here also accounting policies, what FRRB recently made a comment was that many of the entities are stating in their accounting policies that non-current investments are stated at cost other than permanent decline. So no, the standard is very clear that there cannot be a permanent decline. It has to be other than temporary, because permanent you can never say. So okay, you know that there is a decline and it's not temporary, then you need to provide for it. So the wordings make a lot of difference, and generally these are the things that gets looked out and probably get caught also. So be careful. Whatever accounting policies, disclosures they have given, just make sure that they are in line with the wordings of the standard. So this is something that we need to do. Current assets would include stock, which is stationary, etc. Grants receivable. So if the grant has been sanctioned, right, and there is a reasonable assurance as per AS 12 that, the grant will be received and you will be able to comply with the conditions of the grant, right, then you can recognize the grant as a receivable. Okay. Apart from that, you will have cash equivalents, loans, advances, deposits. So loans is something where you take repayment in monetary terms along with interest, whereas advance could be for, for special purpose. It could be like advance salary or for advance for purchase of stationery. And deposits could be the security deposits that we pay with, place with the landlord or with the utility companies or the utility providers. Current liabilities to be presented as an offset of current assets would include the normal current liabilities and caution money that has become due within 12 months. So the students who are now going to move out of the school in the next year and will have claim over their caution money is something that will have to be disclosed as a current thing. So this is it as far as, my part of the session is concerned. We discussed the planning aspect, wherein we said that the workflow should be in terms of risk assessment, the risk response phase, and then the reporting phase. We understood the fund-based accounting, and then we had a look at a very quick look at a lot of balance sheet items. So I think Asta ma'am has joined. Hello, ma'am. So I will pass it on to you now, for, to take it forward.
Hi, Kumar. Thank you so much. Good evening, everyone. My name is CA Asta Gupta. I'm a Delhi-based practicing chartered accountant. And before I begin my deliberation, I would like to just take a very small moment to thank the Auditing and Assurance Standard Board of ICAI for hosting such sector-specific audit programs for the benefit of the professional fraternity. So many thanks to Sanjeev sir, Vishal sir, and Anil sir, and also giving such an esteemed platform to beginner chartered accountants like us, so we also get an opportunity to prepare and address all the professional fraternity. And so today's topic is obviously very important, especially when you talk about education, in as a role in which plays its role in the nation development. I would also like to take a moment to thank our moderators, CA Sudeep Agrawal and CA Atul Khurana. I'm sure this must have been a smooth deliberation. And so before I go on to deliberation, I will just take a moment to quote one of the finest global leaders in the world, that is Nelson Mandela, who said that, just a second, yeah, that education is the most powerful weapon which you can use to change the world. So if something which is so important, so obviously the institutions which have been, they are the ones who are responsible for educating the youth, educating the future of our country. So like the schools, the colleges, the financial reporting for these institutions also have to be accurate. Because what happens is that majority of the schools, majority of the institutions are funded. There are people who contribute money. There's so many resources that go into play so that the youth and the future gets educated. And obviously, they would like to know how the money is being utilized, whether it is being applied for the charitable purpose of education or not, whether the objectives that were set up, at the time of taking the grant, taking the fund have been met or not. And this is wherein we as chartered accountant, we as professionals come in, show our expertise and follow obviously the accounting standards, accounting policies to draft and to report on the accuracy of the financial statements. Other than the financial statements, which has been very beautifully been covered by CA Kumar Rai Singhani, I'll also comment upon the reporting bit and other statutes which may come into play and which becomes important for us as an auditor. So am I audible? Am I clearly audible to everyone? Just give me a thumbs up. Great. So I'll just quickly share my screen. Give me a moment. Okay. Is my screen visible?
Not visible.
It's not visible.
Yeah. Is it
Yeah,
visible?
now it's visible.
Great. So I'll just quickly do a recap of the subtopics that were covered by Kumar in the previous session. So Kumar talked about the different type of processes that exist in the school in the terms of admission, then term of the hiring process, inventory management, etc. Then second, the different type of financial statements that the school is required, the school's management is required to make so that we as auditors can comment upon. Meaning of fund and non-fund based accounting. So he very segregated, and this is something which is very unique to the education sector. And it was very important to cover this aspect so that, because every time you'll go for auditing of schools, you will obviously see a fund and non-fund based accounting that has to be followed. And understanding different elements of the balance sheet, wherein covered upon the assets and the liabilities part. Then understanding different elements of the income and expenditure. So some part of the income was covered by him, rest I'll be taking it up. So after everything, I will be beginning my deliberation with covering the income part and touching upon certain different revenue sources for the school. So first, obviously, not for any school to run, there is fees which is collected from the students. And in fees also, there are different type of categories. So I will be touching upon different type of categories and explaining their meaning and if there is any peculiar accounting treatment that they need to be done. So first is the tuition fees, which is the major source of revenue. And this obviously, it is collected for the entire academic year. Now, so I'm from Delhi, and in Delhi, the academic year is from April to March. It could be different for different states. And in case the academic year is different from the financial year, like in Delhi, it is same as the financial year, so this kind of problem does not arise. So if the academic year is different from the financial year, then in that case, the fees received for the next financial year in the current year will be recognized as liability in the balance sheet because it is fees that has been received in advance. And the fees which is received for the current financial year in the next financial year will be recognized as revenue in your income and expenditure account. Next, we have the one-time fees. So one-time fees, as the name suggests, it's basically like a registration fee or an admission fee. So when the student seeks admission into the school, it's a non-refundable amount that is taken by the school. It is only a one-time amount. Again, the name can vary from school to school, but normally these kind of technologies are used in terms of registration and admission. So this has to be recognized only when it has been received. So if this amount has been received from the student, then only the school should recognize the registration and admission fees as income. Next, we have the caution money. So Kumar had talked about the caution money, which is basically like a security deposit because it has to be refunded when the student leaves the school. So anytime at the time of admission, along with the registration fee and the tuition fee, caution money is also taken, but with the condition that it will be returned once the student exits the school, either in terms, when you clear your class 12th examinations, maybe after that, or you're taking a transfer from one school to the other school. So like the slide suggests, this is refundable and the nature of deposit, that is why it is treated as a liability. And there could be circumstances wherein we treat this as income as well, which is where the student waives his right to receive the caution money. There could be certain instances that happen in the school wherein the right of the student is waived off. It could be in terms of, maybe misbehavior, or he could be suspended on certain grounds. And that is where this deposit or this liability gets converted to income, because now this money will not be refunded back to the student. Then such amount is forfeited by the school, again on certain grounds. That depends on the policy of the school, on what grounds do they wish to forfeit that amount. Or third instance, wherein the student has left the school, the student has taken transfer, but it has not been claimed by the student. Many instances happen wherein, because obviously the student volume is big, and sometimes it is not easy to keep a track. So in spite of repeated follow-up with the parents of the school, with the parents of the student does not claim that amount. And this amount, because it is unutilized and it is remaining in the caution money, so after a certain period, again, depending upon, for example, the Delhi School of Education, there's a separate statute for this, and they have defined a particular period up to which unclaimed caution money has to be shown as deposit. And after that period gets over, and still, if that amount has not been claimed by the student, then it becomes your income. Because now the repeated efforts have been made, you have tried to follow up with the parents, but again, the amount has not been claimed by the parents. So now it is safe for the school to convert this amount into income. But obviously, we as auditors need to be aware of the statute that is applicable and what are the conditions that are in place, and whether the school has met the condition. There should be good evidence of follow-up. It could be in the form of mail or anything else, to ensure that, okay, there were efforts made by the school to, reach out to the student and his parents, so that they have not just converted a deposit to income. So I've also made a small timeline here. So if suppose you're sitting in, so 23-24 has ended now, but still for FY 23-24, you had taken the caution money. And for F4 24-25, because it is only 1 year from the end of the financial year, this caution money will be classified under current liabilities, because 1 year has not lapsed. And from FY 25-26 onwards, this will shift to non-current liability till the time the conditions for converting this caution money into income entail the conditions that I have mentioned above in this slide. Next, we have the sale of prospectus. Now, at the time of admission, when you go, or maybe for example, if you're at an education fair, there are a lot of institutes which organize education fair or any other event wherein prospectus is being sold of the school. Then again, in that case, the revenue should be recognized at the time of sale of prospectus. That is when the sale actually happens. Canteen income. If there's a school which is running canteen on its premises, again, it's a very common facility that is offered by the school. In such case, now there I have divided certain circumstances, and depending upon the circumstance, the revenue recognition check has to take place. So if the canteen is owned and run by the school, then at the time of sale itself, the revenue has to be recognized. Now, there could be instances wherein the running of the canteen is outsourced to a third party. So a contract is given and a certain agency has been, hired by the school to run the canteen. So in this case, depending upon the contract period, you use the time proportion method for recognizing the revenue. Thirdly, in addition to, this is for the day scholars that the canteen is being run. If the school also has a hostel on its premises, and they are paying certain fixed amount, every month. And this will also cover the instances wherein there is a midday meal scheme, where, sometimes there are schools which let their students stay beyond, school hours also. It's like a boarding school, they don't stay overnight, but they stay till the evening. And then certain meals are provided. It could be as a lunch or could be as a snack. And a fixed amount is taken from the students on a monthly basis, because for the students who are availing this facility on a regular basis. Again, in that case, a time proportion basis method will be used, and whatever charges have been received will be proportionately recognized as revenue. Next, school premises given on rent. There could be instances wherein there's an ATM facility available on the school, or there could be a bank branch on the school, which is very common again, because obviously so much fees is received from the school. The payroll is quite large. So a lot of banking transactions happen in the school, and that is why it is very common for at least the big schools wherein there will be a bank and there will be an ATM at the school. So in this case, the bank is required to pay rent to the school. Apart from that, there could be a uniform shop, or there could be any other facility wherein they use the school premises to pay rent. So in that case, rental income which is received by the school will be recognized on the time proportion basis over the period for which the rent is received. Hostel fees. So if the school is also providing hostel facilities in addition to day scholars, then in that case, again, we will use the time proportion method on the basis of which the fees is received. Transportation facility. Now, obviously, again, this is a very common facility which is offered by the school in terms of buses, it could be cabs, it could be vans. And in this case, this transportation fee is separate from the tuition, the annual, and the other fee component. Because again, this is basically charged to the students who actually avail it. So in this case, again, we have two circumstances. Now, one could be wherein the school owns the entire fleet of transportation which is provided to the students. So in that case, you will recognize the income over the period during which the concerned facilities are provided by the school. In case, if the fleet is not owned by the school and the school has engaged a transporter or school has engaged an agency, which basically provides transportation on contract basis, then again, you will use time proportion basis over the relevant contract period. So in this case, we'll have to go through the agreement, which is between the agency that is giving the transportation facilities to the school, understand the terms and conditions, and accordingly recognize the revenue. That what is the fee structure that they have defined, and how are they giving charges? How are they charging to the school? So I think that document becomes very important in this particular scenario. Then further in revenue sources, we have obviously the sale of books and uniforms. Again, I think in most of the schools, this is also outsourced to a third party, wherein you have a bookshop or a uniform shop, right? And there's contract with the third parties. Again, you go through the agreement contents, you see what kind of billing, is done by these, these parties. And based on the time, based on the circumstance, the revenue is recognized. So first circumstance could be like a lump sum payment, that in one go you make the entire payment to the contractor, and in this case again you read to the contents of the agreement between the contractor and the school and determine that how is the revenue actually recognized if it is being done on the time proportion basis. Second is commission received on the basis of value of goods sold. Now if this method is there wherein the revenue, wherein the basically the charges that are being paid to the uniform shop or the bookshop is on commission basis, then in that case, it has to be recognized at the time when the sales are made. Sponsorship fees. Now, there are a lot of, schools which organize annual days, or they could be organizing fetes, or they put up fairs, and wherein they invite, people to put up their stalls. It could be like a food vendor. It could be, an education vendor. It could be anything. So in that case, people advertise their, products, they advertise their brand. And that is where the school charges sponsorship fees from them. So this has to be recognized in the period in which the concerned function or the concerned event is held. And depending on what was the entire process. So like Kumar had said, so these aspects, this may look like that they're single aspects of the, income and expenditure account, but you need to understand the entire process of, for example, how was the bookshop vendor, how was he onboarded? Similarly, in case of sponsorship fees also, what's the entire process? How do you shortlist the, L1 vendor, and who authorizes it? So all these sub-processes will be there in the background. And this is apart from this, and how do you recognize revenue in these circumstances? Next, we have advertisement for school magazines. Now, the school magazine which is released by the school, there could be certain pages on which advertisement is given by, it could be by the donors, it could be by, different brands. So this again has to be recognized in the period in which the advertisement appears before the magazine readers. This is very much similar to the sponsorship fees, like we talked that as and when the event takes place, the period, in that period only revenue has to be recognized. Similarly, for the school magazine, the period in which the advertisement actually appears. So that is when the service in the form of advertisement has been given, and that is how you should recognize the revenue. Amount received from board for payment to the exam invigilators. So what happens is, if we talk about like the Central Board of Secondary Education or Delhi Board of Secondary Education, they host a lot of examination on pan-India level, and they hire teachers from the school for the purpose of exam invigilation. And there could be instances also wherein they use your premises to host the exam. So again, this kind of fees is received from the board. So I've mentioned here there are two parts to such kind of revenue. So first is the amount received from the board, which is recognized as the income. That is, the board has basically appointed the school to conduct the exam. Then second part to it is the amount paid or payable to the invigilator, which is to be recognized as an expense. So I've also made a diagram in the next slide. I'll explain it, better through that diagram. So before I go on there, I've mentioned here that it could be an instance wherein there is a particular undistributed element to the invigilators on the balance sheet date. This has to be shown as current liability because we know this will eventually convert into expense in the maybe next financial year. So here I've made a small diagram. So this is how the board fee basically looks like. So the student first pays the board fee to the school. This is part of their, fee slip. So if you have some child who is basically giving class 10 the class 12 board exam, then if you happen to see their, a fee slip, in addition to different components of the fees, you'll also have a board fee, because it's something which the school collects from the student and then he submits it to the examination board like the CBSE. So here I've shown. So first, the school collects the board fee from the student, which is shown as income. And then this board fee is submitted to the examination board or the CBSE, which is like the expense. Now, any fee which is collected from the students that could not be remitted to the board. Now, this could be an instance wherein the financial year end comes into picture. I mean, that's the only instance I can think of here where a situation like this will come. So you need to show this as a current liability as a balance sheet date. After the actual year for which this fee pertains to, then it gets converted into the expense, which is shown in this one, the red one. Okay, so now we've understood the different revenue sources of the school and how it is shown in the income and expenditure account. How do you recognize revenue in different instances? Now we will move on to the expenditure bit. So first, and I think the biggest expense that the school makes is in the form of staff payments and benefits. So obviously we have the teaching staff, we have the administration staff, and this, depending upon the volume of students that you have, this is a major expenditure that the school makes. And under staff payment and benefits, again, we have teaching and non-teaching staff, like I said, the admin staff. So these are the broad heads which can form part of the income and expenditure account. So salary and wages, including allowances, basically your payroll. Then the employee welfare, including retirement benefits in terms of gratuity, leave encashment. Then invigilation charges paid. We just discussed that in the previous slide. This is the charges that are paid on behalf for the CBSE. Another employee cost that cannot be classified here. Then we have the transportation expenses. So again, if you refer back to my slide where I talked about the transportation fee that was taken by the school, we had divided into two parts. First was the instance in which the vehicle is owned by the school, and second instance is where the vehicles are not owned by the school. So again, the way you have the income part, you also have the expense part. So if the vehicles are owned by the school, then the expense nature will be a little different. And in case where the vehicles are not owned by the school, then you pay the hiring charges, the rental charges, and the related expenses to the contractors. Apart from this, we also have the affiliation charges that are paid to the different board. Then the board examination fee, hostel running expenses. Further expenses, we have the administrative and general expenses. Now, this is I don't think this is something which is, particular to a school. So this is something which you normally find in mostly all of the income and expenditure account, but nevertheless, I'll repeat it for the sake of it. So we have the rent rates and taxes, communication expenses, printing and stationery, electricity and water charges, travel conveyance for both teaching and non-teaching, insurance, promotional expenses, auditor remuneration, very, very important, and others. So these are the general expenses that form part in the general category of the income and expenditure account. We also have repair and maintenance. So I think capital expenditure is very heavy in terms of school because, there's a lot of, for example, again, depending from school to school, what kind of facilities they're offering. For example, there's a school which has an auditorium, which has a sports arena, they have a library, right? So that is why the capex becomes quite intense. And this is where the building repair and maintenance also becomes a very, important aspect of this is something which you will see in the expenditure side of the school financial statements. Furniture and fixtures, obviously, because there are classrooms, there will be desks, there will be chairs, staff rooms, again, major expense. So that is why we have highlighted this particularly. And herein, I think as an auditor, you need to keep a track whether it has been correctly classified as a revenue expenditure or whether it should have been, classified as a capex or not. So this is wherein we need to, use our professional judgment and go through the accounting standards, understand the situation, and then seek comment upon the correct accounting or not. Then we have also depreciation, then financial expenses, if there are loans that are taken by the school, whatever interest that they are paying, bank charges, loss on sale of fixed asset and inventories. Because what happens is that the fixed asset volume is so high. So there could be an instance wherein it is being disposed of, it is being also sold. For example, nowadays smart classes have become very common, and that smart class technology is upgrading from day to day. So a projector which was being used, say, 7-8 years ago may or may not be relevant now. So that kind of sale of asset will be there. So accordingly, profit and loss has to be recognized in the financial statements. Other expenses, write-offs, provisions, miscellaneous expenses, and finally the appropriation, which is when you transfer the surplus or deficit to the fund side in the balance sheet. Okay. So now we are done with the broad heads of the income and expenditure account, that what all common elements that you will find in the income and expenditure account of schools. Let's move on to audit of grants and donations. So if you refer back to the deliberation made by Kumar, so Kumar had mentioned that, the schools, they receive a lot of grants and donations from different donors. And I had also mentioned in the beginning that these schools, because it is a charitable function, right? It's done for the betterment of the country. So there are a lot of business houses, a lot of people who give money so that these schools can run. So that is why audit of this particular aspect of the financial statement is very important in terms of school financial statements. So I thought I'll touch upon this and, give you a brief background. So what are the different type of grants that can be received by the school? So we have hostel and building maintenance. So the idea of giving you these name of these grants is to give an understanding. The names can vary. So you should broadly know that, okay, these kind of grants may be present, when I'm auditing the financial statements of a school. So we can have a hostel building and maintenance grant, then building grant, rent grant, pension and retirement benefit grant only for the, retirement benefits of the staff. Then grant acquisition for equipment, furniture, etc. For example, again, coming back to the smart lab example, now the smart lab is still a fairly new concept in schools. So there could be a particular grant dedicated only towards the, development of the smart class. So the reason, again, I'm telling you this, is that you understand when you audit the grant, this particular specific objective for which the grant is being given is being met or not. Then we have the staff grant. So these are some broad grants. It could be more also, it's not exhaustive list, just to give you an idea. So when we audit grant and donation, I think we need to refer to AS 12, which gives certain rules and certain, things that you need to keep in mind when you account for the grant. So when do we recognize a grant? So as per AS 12, which talks about accounting for the government grants, there has to be a reasonable assurance that the grant will be received. So whenever you start the auditing of grant, the first thing that you need to ask as an auditor is the documentation. That what was the correspondence between you and the person who has given the grant? What were the terms and conditions, right? And have you received the money? And If not, then what are the different milestones at which you'll be receiving the money? Because I'm sure anyone who gives money needs to see some progress. So you need to go through the documentation. You can have a questionnaire ready around this, only to determine that there is a reasonable assurance that the grant will be received or not. Because that becomes like your audit evidence. If tomorrow at some point the grant is not received, but you can always say, when I had done the audit, so I had these points or these audit evidences in place, which I as an auditor felt that there was reasonable assurance that the grant will be received. The conditions related to the grant have been met. So like I had said that if a particular grant was given for development of the smart labs, so obviously you will see if the smart lab is actually in place. If not, then what are the steps the management is taking to meet the conditions that are given in the grant? And if it's a milestone based grant, if a particular milestone has been received and that corresponding grant has been given to the management or not. So these you need to correlate. You don't have to go in depth in it, but you need to understand that, okay, if the money has been received, it will be received only when the conditions have been met. If the conditions have been met, so anyone who is giving money would like to see the evidence. So what was the paperwork that was submitted? If you can physically visit the smart lab, see, okay, this was the progress that was done. So just to safeguard ourselves as auditors that, okay, this was the basis on which I could establish that these two conditions, which are the pillars of AS12, have been met. Again, like I said, documentary evidence will be the terms of the grant, letter of the grant, acknowledgement. And also, you need to understand which is the authority which is giving these grants. Are they, somehow, how the school business runs, there could be some shadiness attached to it also. So you need to see where the money is coming from. Is it an actual genuine entity or not? That check can also be there in place. So moving further into audit of grants and donations, I have tried to cover that depending on what kind of grant is given, what kind of accounting check you will do. Just allow me a second. Yeah. So let's talk about a grant which is given in the form of a non-depreciable asset, like a freehold land. Now, there are a lot of trusts which have land, and especially in rural areas or on the outskirts of the city, wherein they want development to take place. So they give, the gift, or they grant a land to an educational institution where they can run a school. So in this case, wherein the grant is in the form of a non-depreciable asset, first, you need to recognize this as restricted fund in the balance sheet. So that should be your first check. Then if the grant is given on fulfillment of certain conditions over different financial years, because obviously if you're giving a land, that means the school will be developed and it is not a one-year activity. It will take some time for the entire facility to develop. Or if it is not the school, it could be like a sports arena. It could be like a laboratory. You've given a certain piece of land for that. So it cannot be a one-year project. So in that case, you will recognize the grant as income over the life of asset. So basically, this will result in deferred recognition of the grant. Let's talk about depreciable asset now. So in this case, when you have a depreciable asset, where the grant is in the form of a depreciable asset, then you need to recognize grant as deferred income. Am I audible? I hope there's no glitch. Can you just give me a thumbs up?
Yes, you're audible.
Yes, you're audible.
Oh, great. Okay, thanks. So coming back to my slide, I was talking about the grant in the form of a depreciable asset. So herein, you need to recognize the grant as deferred income. In this case, this deferred income is recognized in the income and expenditure account by allocating it over the useful life of the depreciable asset in proportion in which the depreciation of the asset concerned is charged. So again, there'll be two parts to such grant. First will be the deferred income. For so many years have passed, and let's say it's a 10-year life of the asset is 10 years. I'm sitting in the 4th year. So up to 4th year, the income will be recognized. And from 5th to 10th year, it will be shown as a deferred income balance in the balance sheet. This is how you need to recognize the grant in your financial statements. Next kind of grant is a non-monetary asset. Now, non-monetary asset is something which either it is given at a concessional rate or it is given free of cost. For example, it could be furniture, it could be books, it could be, certain laboratory equipment. So depending on the situation, you have to see if the management has done correct accounting or not. So if the particular non-monetary asset is received at a concessional rate, then you account on the basis of the acquisition cost. And if the monetary asset is received free of cost, then you will record it nominal value of rupee 1. So the idea of recording at nominal value of rupee 1 is to report that this particular asset is there in place, and the user of the financial statement should know that, okay, there was one particular asset which was received free of cost by the organization to which I am giving money, and therefore I would like to know how are they utilizing their asset for the benefit of the school. Because with this, the visibility of such asset comes into the financial statements. Otherwise, the user of the financial statement will not come to know if the such asset, it is existing or not. Next, some kind of grant could be given to meet the revenue expenditure. So if a particular grant is, given to meet the revenue expenditure, so obviously it will be recognized as in the income and expenditure account as income only. Lastly, if the grant is given as promoter's contribution, if the trustees themselves have given such fund, then this has to be shown as general fund in the balance sheet. It is shown as general because this does not have any specific, application, or does not have any restricted application that, okay, whatever money I'm giving has to be applied for so and so purpose. It's just a general donation to the school for smooth running, and that is why it is shown as part of the general fund in the balance sheet. Okay. Now, what happens when the conditions relating to the grant are not met? So like I said, you see in the balance sheet that, okay, there are certain grants. Then you meet with the management, you understand the conditions, you go through the documentation. So that is the, how it was supposed to be, how the condition should have been met. You establish that. Now, when you actually come and go through the balance sheet to speak to the management and you see that, okay, the conditions were not actually met, or, they were partially met, and there could be instances where the grant was received but the application was not taken place, or the grant was rejected or partially given because the conditions were not met. So what do we do as an auditor to ensure that the correct accounting is there in place or not? So the grant becomes refundable. So if the terms of the grant are such, between the person who has contributed the money and the school, that in case you do not fulfill the grant conditions, and you, in that situation, whatever money we have given to you as grant, or whatever asset we have given to you as grant has to be refunded or returned back to us, then in that case, you need to ensure that this particular grant is treated as an extraordinary item in the financials, and also there should be an adequate disclosure and notes to accounts as to how this extraordinary item came into place, so that everybody knows that, okay, we as the management, failed, or we could not meet the conditions due to so and so reasons. The reasons could be genuine also. I'm not saying it's the fault of the management. And hence, the grant was refunded and was shown as an extraordinary item in the financial statements. How do you treat a refundable grant? So, again, depending upon the nature of the refundable grant, the treatment takes place. So, the nature of refundable grant is revenue. So, the first application of the revenue refundable grant will be towards the unamortized credit related to the grant, which was standing in the balance sheet. So if you refer back to the first slide when we talked about the grants, I told you there will be a deferred revenue part which will form part of your balance sheet. So if the grant, which was revenue in nature, it is being refunded, so first you need to apply to the unamortized credit related to the grant, and the balance amount, if any, let's say the unamortized amount was less than the amount which is being refunded, that will become as a revenue item and be shown as an extraordinary item. In case it was only to the extent of the unamortized credit, then it will be set off, and if it was less, then it will be shown as the expense part as an extraordinary item in the profit, in the income and expenditure account. Now, if the nature of the refundable grant was in the form of a specific fixed asset, so in that case, you will increase the book value of the asset because now you are refunding the asset. You will reduce the capital reserve, and you will reduce the deferred income balance, which was appearing in the balance sheet, because now that specific fixed asset is no longer in place. Promoter's contribution. In this case, the amount recoverable will be reduced from the capital reserve. Why? Because this amount was earlier shown as part of the general fund. So now you will reduce it because you're refunding it back to the promoters. Okay, now let's move on to the auditing of the employee benefits. So when we were talking about the expenses part of the financial statements, I had mentioned that this payroll to the teaching and non-teaching staff, it forms a huge component of the income and expenditure part, and hence, obviously, wherever there will be employees, the employees' benefits will also be present. And when you talk about auditing employee benefits, your Bible is AS 15, according standard 15, which talks about the accounting standard on the employee benefits. So like I said, it's a major revenue expenditure, and it includes all payouts in the form of salaries, allowances, and retirement benefits to the teaching, which is on the payroll, and the non-teaching staff, which could be admin or contractor teachers. So before I move on to the AS15, so obviously when we talk about salary, we have to mention the TDS, the tax deduction at source under section 192. So you need to ensure that it is being properly deducted, properly deposited, timely deducted, timely deposited, the returns are being timely filed, and the documentation that there should be a process in place wherein timely reminders are given to the teaching staff, the non-teaching staff about the documents to be submitted in case they are, taking in deductions. And also with the recent, the old and a new regime that has come into place. So is there a process in place wherein the school, sends mails or sends, collects information regarding if the particular teacher is opting for old regime or new regime, and whatever option has been taken, the TDS has been deducted in that form or not. In case old regime is being selected, then whatever, deductions that the teacher is availing in the form, it could be the HRA, it could be, any other conveyance or any other purpose that the school is giving. Again, and ATC reduction, ATD reduction, are you taking the proper documentation to ensure that TD is being deducted properly or not? So I could not put in the text here because I thought it's a very common compliance. But still, since we are auditing the payroll, this also becomes a very important aspect while auditing the payroll part. And in any case, as an auditor, when you audit the statutes, you cover the TDS aspect. So this timeliness and this statute completion has to be there. So coming to retirement benefits. So I had mentioned that we need to refer to AS15, which talks about the employee benefits. So the cost of retirement benefits has to be spread over the period of service of the employees. Cash basis is not allowed. It's not like as in when you make the payment, then it will happen. It has to be spread over the period of service. So in case, if we talk about what are the schemes, different schemes that come under employee benefits. So first we have defined contribution scheme in the form of provident fund. So very important, the accounting has to take place towards whether it is this contribution of the employee, contribution of the employer. Then there is, that timely amount has to be deposited. Correct compliance has to be there in form of we have that electronic challan cum return that has submitted at the 15th of the month. So again, this service could be outsourced, this service could be in-house. You have to see how the compliance is taking place and whether the salary dues are being timely deposited, proper registers are being maintained, because even the EPF authorities, they also do their audit, they also inspect, and that is where the school should not, be caught wrong-handed. So we as auditors, we don't have to go deep into it, but we can always advise them that, okay, you should have these compliances in place. And in case there's a school which is required to get this tax audit done, in any case, you have to, comment upon the EPF and the ESIC contribution. That is why I've mentioned compliance of Section 43B and Section 3615A of the Income Tax Act. So whether the compliance has taken place, the schedules are readily available, the counting is being properly done as per AS15. And you can also, there's a particular format which is defined for Section 43B in the tax audit report. So that format is properly prepared to capture the dates of the due dates and the actual due date of deposit. And if there's any delay, whether the same interest has been paid or not, and if it has been delayed, you have to ensure that this amount is disallowed from the income of the school. Then defined benefit scheme, which talks about pension and gratuity. So at the time of retirement, these are the two benefits that the teaching or the non-teaching staff is eligible for. So again, correct accounting. You need to refer to the, the rules given under AS15 for accounting when it comes to pension and gratuity. And compliance of Section 40A7. So this compliance Section 40A7 of the Income Tax Act talks about creating provision in case of gratuity. And there's a separate reporting in the tax audit report if you need to conduct the tax audit of the school or not. So this needs to be complied with. If we continue with the talking of pension and gratuity, in this case, the AS15 talks about first, I have to create a provision for the accruing liability. So this is where AS15 and Section 40A7 of the Income Tax Act get linked, because gratuity as an expense is not incurred on a yearly basis. It actually materializes when the teacher leaves the school or retires from the school. So you need to provide for that lump sum expense, which will, accrue over the years. And so that आपको एक बार में इतना झटका ना लगे उस expense का, that is why you need to provide for this. And this is not just being prudent, but it's also a requirement to comply with the requirements of AS15. And in case, how do you determine the accruing liability? Because if we have to create a provision, I need to come at an estimate. If I have to arrive at an estimate, then I need to know how will I do that. So for this, the school has to engage an actuary who will do an actuarial valuation, say once in 3 years, to determine, okay, which all teachers are about to retire, how much gratuity expense the school will be, bearing over these years. And this is how they need to provide. So the report, actual valuation report, becomes a documentary evidence to determine if actually the provisioning of the actuary amount has been done properly or not. Again, for the years for which the valuation is not done, the actuary report should specify the amounts to be charged to the income and expenditure account. So in this case, you rely upon the work of an expert, and then you see that, okay, the provisioning that the school management has done is as per the actuary report or not. Defined benefit scheme, pension and gratuity, we're continuing with that. Now, there could be an instance wherein such liability is funded through a scheme administered by insurers like LIC. So in this case, how do you do the accounting treatment? So first of all, you need an actuarial certificate or to see to understand the working of the contribution payable to the insurer. And this particular amount becomes the actual liability. The insurer funds the liability whenever it becomes due. That is the time of exit of the employee. And this is how you need to understand whether this accounting is done as per this particular slide or not. With this, we have ended the auditing of the employee benefits, and let's move on to the records. Different documents or records that need to be verified by the auditor in educational institutions. So you can refer to the minutes of the meeting of the managing committee, students' fee register, cash book, rental lease agreements, then correspondence and other documents linked to legacies, grants. Some of the documentation I've also covered during my previous slides. We were discussing different income and different expenses. Again, this is not an exhaustive list. This is just to give an idea that this is the kind of documentation that the schools maintain. Audit procedure and approach. So this is basically, I've just made this slide to give you like a step-by-step, what all, like, Kumar had said that gone are the times that we do traditional auditing and we need to make a risk-based approach. We cannot just go and pick up the financial and start auditing. There's a particular process that is defined in the standards of auditing. And just to give you a brief overview, so first, obviously, you need to have an engagement letter with the client, which is your school or educational institution, which talks, you need to refer to SA 210. Then you can talk about the audit planning, wherein you make the audit plan, make the matrices, allocate your staff. Then see what is the legal form of the organization. You go through the memorandum, you go through if it's a trust, then you see the trust deed. If it's a society, there could be a registered document with the registrar. What are the applicable statutes and the organizational structure? Then we need to understand the entity and its environment. So basically, we are trying to understand what kind of, activities are done by the school. Then if we talk only from the financial statement perspective, then what are the chart of accounts and the accounting manual, policy and procedures? Then leases, contracts, agreements we've already talked about. Enrollment procedure, this becomes part of the processes that Kumar had defined in his previous deck. And what are the different physical facilities? This is very important because on the basis of this, you'll be able to determine if the same reflects in the financial statements or not. Because everything, whether it's the expenses, whether it's the grants, everything is related to the facilities that the school offers to its students. Also the income part. Placement and training program. If it's a college, then the placement committee also comes into place. Inspection reports of licensed authorities. Now, there could be instances wherein if it's a school, there could be some food inspector who's visited. We've already talked about the, EPFO, which comes and see if the EPF compliance is in place or not. Now, depending upon the state to state, the education board also does its inspections from time to time. And opinions in the prior audit reports. Now, for example, if we talk about Income Tax Act specifically, there is section 1023C and there's a form 10B, which is done for the audit of these educational trusts and societies. So you can obviously rely upon those audit reports also to gather any evidence to, when you're conducting the audit of the schools. Risk assessment, institution-wide risks, understand the control environment. This is very generic, like how the audit approach is taking place. That's why I'm skipping it because it's not specific to a school, but obviously every audit program is applied to whatever institution you are conducting audit of. So since we are running a little short of time, I wanted to quickly cover the income tax aspect. Just give me a second. I will skip this. Okay, again, very quickly. When you talk about the audit of fixed assets, first, very importantly, because the volume of fixed assets is so large in school in terms of furniture and fixture, laboratories, buildings and all. So there has to be a proper fixed asset register, FAR, preferably if it is electronized, and if it is being maintained on a regular basis, it has to be there. So you need to sit with the management, understand that how do they, identify their assets. Normally there is a, if you've gone to schools, there is labeling done at the back of the chairs or the tables or the blackboards. And if the same is reflecting in the FAR or not. Then whether physical verification has been conducted at regular interval. Again, depending on the volume of the school, what is the frequency and whether the PV has been done regular intervals or not. And whether there has been identification, specific identification for the assets that have been procured from the grant or specific donation. This is very important because if in the FAR itself that demarcation has been done for these particular assets, then you'll know, okay, these are these assets which have been funded, and then accordingly you will change your audit plan. Accordingly, the accounting treatment and the representation in the financial statement will take place. Whether depreciation has been charged properly as per Income Tax Act or not. Right. So this is very important. Although again, fixed asset is a very common aspect in various organizations, but for school it becomes important because of its volume. Now, like I said earlier, I wanted to quickly cover the income tax related compliances. Now, educational institution is a non-profit making organization. It is charitable in nature. And there are different legal entities of an NPO. It could be a society registered under Society Registration Act. It could be AOP, Association of Person. It could be a trust. And like I'm saying repeatedly that, education is charitable in nature. So this is where I'm coming from. If you refer to section 215 of the Income Tax Act, it defines the charitable purpose. So it has certain limbs to it. The first limb talks about relief of the poor, there's education, yoga, medical relief, preservation of environment, preservation of monuments, and advancement of any other object of general public utility. So if you see this clause number 2, it is specifically dedicated to education. And that is how it is important from income tax perspective also. And this is where we derive its charitable nature. Now, in the Income Tax Act, it gives benefits, tax benefits to the entities which adopt activities with charitable purposes, which includes your education sector also. So that is where if you've done audits of educational institutions, you must have seen that the trusts or the societies which run the school, they have registered themselves, under section 12A or under section 80G to avail these tax benefits. What is the tax benefit? You don't have to pay income tax provided at least 85% of the receipts are applied towards activity of the trust, society or the AOP. And what happens if the 85% receipts are not applied? Then in that case, this amount is carried forwarded to the 5 financial years. So I'll just quickly make you go through this particular timeline. So if you're sitting in FY financial, FY0, and these are the 5 financial years. So if I have, say taken registration in FY0 under section 12A, and I have suppose received rupees 100. So as per the Income Tax Act, I am supposed to apply rupees 85 if I want to, take the tax benefit under section 11 and 12. Not due to any n number of reasons, I could not apply that rupees 85. So what will happen is I will carry that unutilized amount, whether it is fully unutilized or partially utilized, for the next 5 financial years. That is from FY1 to FY5. That's why I've mentioned here in this timeline. And I can accumulate that amount in a corpus and I have to show it separately. So the reason I'm telling you this is that when you audit the financial statements, when you look at the, funds part, then you need to understand whether the school is also, especially if the accounts of the school and accounts of the society are merged, they have to show it separately, the unutilized component of the corpus, because that's how you will come to know about the compliance bit from section 12 perspective. So this is giving you dual benefit. It is not only helping you cover the accounting standard, but also the income tax aspect as well. So this unutilized amount has to be, it can be spread over the period of 5 years. And every time that corpus will change over the years, it could reduce, it could increase, and you could understand that, okay, what were the various activities, how the amount was utilized, and whether the conditions of section 11 and 12 have met so as to pass on the tax benefit to the school. Also, if you're also engaged in filing of the income tax return of the school and conducting, filing the form 10B, this becomes very important from that perspective as well. In case the receipts these 85% of the receipts again are not applied, आपके 5 साल खत्म हो गए, फिर भी आप apply नहीं कर पाओगे, तो this unutilized amount is taxable at the maximum marginal rate. I mean, just look at the extent of punishment the Income Tax Act gives you, that will just give you 5 years to utilize that particular amount. And if you fail to do that, we will, tax you at the maximum marginable rate. Not even at, कोई मतलब 30% है उसमें, सीधा ही 45% आपका tax लग जाता है उसके अंदर. So this becomes very important again if you are looking at the income tax compliances of the school to understand how have they applied the funds. The receipts will exclude corpus donation. You have to keep this in mind. Now, very quickly, I will tell you that if the trust society has to be registered in Section 12 to avail these benefits. So for that, you need to see if the Form 10A has been filed. And the purpose of filing Form 10A has to be education. It should not be any other limb of charitable purpose. The period, because what happened was when this Form 10A was introduced, initially provisional registration was given for 1 year. And I think within 6 months, you had to apply for regularization. So you need to check if that has been regularized or not. And the time period regulation has been passed or not, because they have become very stringent. And you need to, there's a detailed questionnaire that you need to answer in order to regularize that particular registration. Then audit of a trust, and it has to be mandatory if the receipts exceed rupees 5 crores. Now let's talk about Section 80G. Now, if the school is accepting donations, then obviously in addition to Section 12, you need to have registration under Section 80G as well. They have a common form. It is Form 10A. Only the purpose of the form changes. So you have to file 2 separate forms. Again, the purpose has to be education. It should be valid, provisional regularization, and regulation has to be in a timely manner. The questionnaire is more or less the same. And donor register has to be proper maintained in the format defined for Form 10BD. So when you are accepting donation, there's a particular format defined under the Income Tax Act when you file Form 10BD, and you need to give the name of the donors. The donation should not be anonymous, and there are certain conditions that need to be complied with. So I've mentioned them here also. So this is the format. I'll not walk through it because we are really short on time. And in addition to Form 10BD, the Form 10BE has to be filed as well. It is basically a certificate of donation that is given to the donor so that they can avail benefit on Section 80G. And 31st May 2024 is the due date. Again, in Income Tax Act, there is a requirement of maintenance of books of account for a period of at least 10 years. And this is the form in which the books of accounts can be kept. Okay. So with this, we come to end of deliberation. And thank you so much for a patient hearing. I open the house for the questions. In case you need to connect me professionally, these are my coordinates. I'm very active on LinkedIn and mail as well. Thank you so much.
Thank you so much, ma'am. Is there any query, Sudeep and Atulji? Kindly take the queries of the members.
Yeah, sure. Yeah. So we have received certain questions from the attendees. The very first question is, how do audit requirements differ between public and private educational institutions?
Yeah, Kumar, would you like to answer that?
So, hi, thanks for that question. And first of all, thanks, Asa, for a great session. I think you covered each and every aspect of P&L in detail and, covering all the revenue related aspects and all those things. So coming to the question, how does the public and private, these things differ? So as we covered right at the beginning as well, okay, as per SA 300 and as per SA 315, planning is a very important aspect of any audit, and audit of educational institutions is not a exception to this. So while we are understanding the business, we need to understand what are the various law and regulation that are applicable. So if it's a public thing, then there will be a lot of government involvement. So you need to factor that thing while you're doing a planning, you're understanding the law, your determination of materiality. Now, because government is involved, your materiality benchmark or a threshold may be at a lower level because it operates in a strictly or a regulatory environment. Apart from that, when you are looking into the private, so we saw that 2 landmark judgments of Supreme Court. So you need to understand what is the degree of involvement of the government that has had. So whether it might be because of the fee regulation or sometimes recruitment, but generally recruitment of teachers will not be there. Private also will further get bifurcated into aided and not aided, unaided. So if you're getting financial support from the government, there will be regulation of the government. So as an auditor, I think first step would be to understand what is the extent that of the role the government is playing in in determining the policy matters, etc. How is entity trying to be compliant with it? And then design our audit procedures accordingly. At the end of the day, financial statements would still look the same. There will be revenue, there will be expense, there will be balance sheet. What difference it will make? It will be to your audit procedure, your materiality levels, and the resources that you employ. So if it's a public, or not private, so you might need someone with an expertise of the law that governs that particular organization. So while you're selecting your audit team, these are the factors that you will have to take care.
I
The
think very
second
well covered
question,
by Kumar. Sorry, please, next question, Atul. Yeah.
Thank you.
so what are the specific challenges in auditing the revenue streams of schools or universities?
Can I answer this?
Yeah, sure.
So I've already covered that in quite detail in my slide deck. So what happens is, because education is a very specific sector, and I think we majorly covered the school aspect only. I'm sure in colleges and maybe a coaching institute or any other different kind of entity that's there, the revenue stream can differ from organization to organization. So you need to understand and recognize it with the management that, okay, the best way to do is to maybe look at the fee structure of the school and see what kind of fees they charge from the students. That is one source. Then the other could be depending on the events that are taking place. Like I talked about the fairs, I talked about the magazines, and I talked about the sponsorship events, then the board event. So again, if it's a primary school, then obviously there'll be no board recognition. If it's a senior secondary school, there will be board that come into place. So all these factors, they vary from school to school, and this comes a little experience, and you need to sit with someone who's from that field that can educate you. Okay, these are different revenue streams. So whenever you audit one school, that audit program will be different for some other school that you're auditing, because the revenue stream can differ from school to school. So that is a major challenge that is why you're very much dependent upon the information that has been given by the management to you.
One more interesting question is there, like from the angle of fraud detection, what are the key areas to focus?
So from the perspective of
Fraud detection, basically.
fraud
From the
detection.
angle of frauds, yeah.
Okay, Kumar, would you like to answer this? I can add later.
Sure. Yeah, sure. I'll just start. So speaking about SA 240, will be the guiding factor here, of course. So while we are planning the audit, we need to identify and assess the risk. And if the risk is a risk of material misstatement due to fraud, it automatically becomes a significant risk. So you need to have specific audit procedures that are directed towards, towards those risks. Also, here one of the important assumption is that SA 240 calls revenue as having a rebuttable presumption for the risk of fraud. So these are the things that you need to keep in mind while the risk assessment. And also you need to understand the concept of the fraud triangle that, wherever the fraud indicators of fraud have happened, generally there will be a missing internal control, there will be a pressure or an incentive, and then there will be the rationalization of the act. So wherever as an auditor, if you find these one of the three indicators, so you be professionally skeptical enough to, accordingly go for this thing. Asa, you can add.
So I'll just add the related party aspect. So you need to sit with the management and first take a list of the related parties. You comply with the SA 550 AS 18. And what happens practically is that because normally if it's let's say a trust runs a school and it's a family trust, suppose, the family members are present there. And you see that, okay, the school uniform shop or the school canteen shop is outsourced. And later when you do the related party analysis, it comes to your knowledge that is being run by one of the relatives of the trustees, and this is how they are basically taking out the money from the school and the fees that is being, paid to the, say, the uniform shop owner or the canteen owner. I'm not saying necessarily happens. I'm just giving you a practical example of how it takes place. So you need to be wary of these, instances. That's how professional skepticism comes into place. You need to see that, okay, because at the end of the day, the school is a non-profit organization. Okay, they cannot be profitable. But the trustees, some of them, they run it as a business because that's how practically it is. So these are different ways of, taking out money from the organization by giving contract to a relative, or, the school, maybe admin in charge or the principal is a related party. So you will see that, okay, decisions are a little biased. So this could also be a very big indicator, and then you can alter your, audit procedure by taking into account like the steps that Kumar has mentioned. You go to SA 240 and then you delve deeper into it. And even it could be an instance that even though the uniform shop is being run by the relative, it is being done at arm's length price, we're okay with that. But you need to do that check. So that's how you can, look at the fraudulent angle when it comes to auditing of schools.
Thanks for the answer to both of you.
Right.
Now I would like to hand over this to Sudeep for taking rest of the questions.
Yeah, thank you, Atul. So my first question is like, are there any specific regulatory requirements that are particularly challenging for the educational audits?
So I think, like I had mentioned, depending this, for example, I'm in Delhi. Okay, so in addition to Income Tax Act, the other employee related compliances, we need to mention to these various circulars that are being released by the Directorate of Education. So there's a specific requirement regarding fee hike. So what happens is whenever the school proposes to hike its fee, they need to apply to the Directorate of Education. They need to seek permission. And that is wherein they do like an additional audit at their end. They take out a lot of discrepancies. And they also from time to time, they take out circulars, they take out guidance notes. So you need to be, educated about that as well, in addition to various compliances that we study. Now, if you're in a different state, so the board will have different requirements there. The state education board might have different requirements there. And again, depending on what kind of facilities that the school is offering, again, the statute volume will increase. So Kumar would like to add something.
Yeah, so I think these aspects plus also where you're receiving university grants or all these aspects. So those compliances generally would be very tricky because if there is a certain non-compliance, there's a clear-cut threat to the going concern or license getting cancelled. So those regulatory compliances, I would say that would be very important.
So I think in this SA 250 needs to be complied with very properly because
Yes.
you understand
Yes,
the legal framework, no? First, I mean, you
Correct.
can, again, like I'm just liking how Kumar had put up that this is not a general audit guy, but by trial balance de do, shuru kar do. No, you can't do that. You need to understand what compliances are there from the management, from the previous auditor. Sometimes they also have consultants, they do look after different compliances,
Yes.
right? So you can get in touch
Yes.
with them. Then you make a checklist, maybe different statute wise, because few statutes we are aware of. Income Tax Act we do as chartered accountants, and maybe the EPF compliances, AS and all. But there could be a very specific act which we may not be aware of. So we'll need to take
Aware of.
the experts, right? So this you need to understand.
Correct. Yeah. And I think we discussed in the session as well. So SA 250 divides them into two categories. One is the
Right.
law having direct impact on FS and the other law. So we need to first obtain a list from the management itself. Okay, first, what are the acts that are applicable to you? How are you monitoring the compliance? Ours would be to, understand the process, rather than ourselves finding out, okay, what all acts are applicable.
Correct. So we depend on the information that is being shared with us.
Correct.
Thank you, Asta ma'am and Kumar sir, for replying. So the next question is like, are there any challenges faced by the auditors in auditing technological solutions being provided by educational institutions like smart classrooms or like tie-ups with the edutech companies to provide interactive animated slides and videos? So any challenges faced by the auditors in auditing those?
So I think I had talked about the smart lab example. I gave it a couple of times. Again, we talk about from the capitalization perspective. First, you need to go through the terms of the agreement. What is the period? Sometimes it could be like an in-house developed, solution. Then intangible asset will come into place. If it is not in-house, it is outsourced. Then if we talk about the TDS as well, if there's a contractor in place. So these statutes will be there. Specific technology, there could be, I'm not sure of the statute here. I apologize if Kumar you're aware, you can mention. But this is all what I can think of broadly.
Yeah. So I think somewhere something related to maybe Copyrights Act or all those things.
That is
So
also there.
and as far as auditing is concerned, I think one more aspect would be the impairment testing of these intangible assets, because the pace at which the technology is changing, and then all of a sudden tomorrow you have another something new coming into the market. So their impairment testing would also be one of the critical aspect, I believe, for these technology driven organizations or institutes.
And also, I think there'll be related costs to it as well. Like the training cost could be there. There
Training
could be
costs, yeah.
particular personnel who know how to operate this particular equipment. Also, you need to understand if this facility is available to all the students or certain classes, and it could be like a a launch that we have recently launched for a certain set of classes. So the fees has to be seen accordingly.
That's correct.
It's not like they're ripping off every student at the cost of smart.
Yeah.
That is not used by all of them. So these aspects can come into place.
Okay,
Correct.
okay. Thank you. So one last question is like, how do we perform the audit of scholarships given by the educational institution?
Okay, so this I think we've not covered in our deck. So, okay, I'll just say in scholarship first you need to obviously understand what are the various scholarships that the school offers. Then what are the conditions and who, because when you select a particular student, there has to be eligibility criteria, who signs it off, what is the, matrix, the who signs it off. And then when it comes about first is a selection bit, then it is a sanctioning bit also. There could be sometimes scholarships spread across certain years. There could be a scholarship, for example, somebody has, topped the class 10th exam or the class 12th exam, and how soon it was claimed by them. So I think this broadly covers. Kumar, if you'd like to add.
Yeah, I think I appreciate what you said. So it has to be process driven rather than a substantive
Right.
testing
Right.
and
I
picking
mean,
up
need
the
to see
sample.
the policy. Yeah, what are the
Correct.
documentation?
And whether they have some people in place, like you said, is there a matrix or a set of persons who are responsible for authorizing, sanctioning, and then the disbursement? So whether there is adequate segregation of duties. I
Right.
think these are the aspects that we should more focus on.
And you can also look at a related party aspect also. Now, there could be an instance that the teacher's, kid or the principal's
Correct.
kid
They
actually
might
may be
recommend
involved.
their own. Yeah.
Yeah, but then if the conditions are being met, then it's fair enough. But you just need
Fair
to be a
enough.
little more, skeptical about it.
Okay, okay. Thank you, Astha ma'am and Kumar sir for replying. So over to you, Anil sir. That's all from my side.
Thank you so much, sir, for such a wonderful deliberation. I appreciate the efforts of both the learned speakers who have covered all the auditing aspects relating to this very important sector, that is the education sector. We have gained a lot through your deliberation. Hope our members have also gained a lot through your deliberation. So thank you so much on behalf of AASP of ICI for sparing your valuable time and enlighten all of our members with your great expertise. Thank you so much, Anup ji, and thank you so much, Sudeep ji and Atul ji, for wonderfully coordinating this webinar, and both the learned speaker, Madam Asta Gupta ji and Kumar Rai Singhani ji. So once again, thank you to everyone. Thank you.
Thank you.
Thank
Thanks
you.
for the
Thank you.
opportunity.
Thank you for the
Thank you
opportunity.
so
Thank
much.
you.
Bye.
Thank you.
Thanks. Bye-bye.
Good evening.